Alphabet Inc., Google's parent company, is planning a highly unusual 100-year bond sale, the first by a tech company in nearly 3 decades, as part of a broad multi-currency debt offering to fund massive spending on artificial intelligence and data center expansion. Alphabet is currently valued at just shy of $3 trillion. Its total expected spends on AI infrastructure are stated to the tune of over $175 billion, a sum equity investors scorn. Alphabet is selling a total of around $20 billion in bonds, a blockbuster offering that includes shorter maturities and this ultra-long note. The proceeds are part of what analysts expect will be a record year for corporate debt issuance in the tech sector, driven by huge capital needs to build out AI infrastructure. Corporate bonds are loans that investors make to a company. The company borrows money and agrees to pay regular interest, called a coupon, until a specific date, in this case a century, when the principal must be repaid. Most corporate bonds come due in few years, 5, 10 or maybe 30. But a 100-year bond stretches the timeline to a full century. That means Alphabet is asking investors to lend money today with the promise of repayment as far ahead as the year 2126, an extraordinary time frame in the world of corporate finance, especially for technology firms. Issuing debt isn't new for big companies, but century bonds are extremely rare outside government or long-established institutions like universities and utilities. The last time a major tech firm did this was IBM in the late 1990s. In simple terms, bonds let companies tap long-term capital from investors like pension funds and insurance companies who want a predictable income and hold obligation stretching decades. For Alphabet, extending debt this far can lock in financing at today's interest rates for projects that take years to pay off. But with bonds that stretch a century, a question naturally arises. Is it fair to expect a company like Alphabet to still exist 100 years from now? Alphabet today is one of the world's largest technology companies, generating hundreds of billions in revenue and free cash flow, with dominant shares in search, advertising, and expanding businesses in AI and cloud services. That diversity and scale give investors confidence in its long-term creditworthiness. Yet history shows that even giants can stumble. Some investors point to past tech leaders that seemed unassailable, only to fade over time with markets and technology shifting. Ultra-long bonds don't guarantee the issuer's survival. They simply reflect investor belief that the company's credit will remain strong enough to meet obligations long into the future. Century bonds are not bets on perpetual existence themselves. They are instruments priced by investors who weigh future risks, interest rate changes, and the issuer's financial strength. Alphabet issuing such debt signals both corporate confidence and investor willingness to back that confidence. In practical terms, the 100-year bond underscores how deep Alphabet's AI investment push has become and how capital markets are adapting to fund long-term technology build-outs. Whether Alphabet is around in 2126 isn't a requirement for the debt to make financial sense. But the market clearly believes today that its business and earning power are robust enough to justify ultra-long fundings.